Good morning. It's Tuesday, September 5th, about 6 a.m. Central Time. Look at the precious metals overnight. They're significantly weaker after yesterday's holiday session. You got gold down 10 bucks, 1957. Silver down 63 cents at 23.93. That's down 2.5% overnight on silver, and it's actually correcting a little bit lower right now. Copper down 2, 383. Platinum down 17 at 951. So really, it was a lot of dominating news overnight on Chinese data and PMI data over in Europe, just really showing a lot of weaker action here. You got the dollar up, yields up, Chinese demand down. So Chinese services PMI comes out at 51.8 versus 53.5. The official PMI was 49.7. That's contractionary, and it's the slowest monthly growth this year. So they're citing slower growth, higher input costs, and that there's speculation that they're unlikely to provide any kind of comprehensive stimulus plan throughout the rest of the year. So China really just pulling the rug out from underneath everything. Remember, silver, 54% demand. A lot of demand on copper, silver, steel, aluminum, all kind of your metals from China. They manufacture things, they send them back, they sell them out. Just the way it works here. So Chinese yuan, lowest since 2007 versus the US dollar. So you got the weaker yuan, dollar costs more, they're not going to import as much. And especially you look at like somebody like a silver producer like Mexico, their Mexican peso has been like on a tear. It's like a 45-degree angle. You got the yuan is so weak right now that there's nothing they can do. They're not importing silver, manufacturing it out. So you got Goldman, they decreased the probability of a U.S. recession to 15% from 20%, so less possibility of an interest rate cut. Although some of these higher input costs from different companies are causing them to cut some of their labor force. So you do have that there. So looking at the current trend, the levels I'm watching in the metals. So gold, the trend's still neutral. Remember, it never got to a bullish trend. Big resistance point, 1975, 1975.70. That's a 200-day moving average and also the bull reversal point. The breakdown point is 1948.50, and we're not that far away from here. So if we get a big washout today or tomorrow, we don't get that turnaround Tuesday, and we get acceleration lower, we're going to go back to a bearish trend on the gold market. Silver, it was really a big red flag. When it broke out to the bullish trend, it never had any follow through. So when it works is if we close above that bull trend trigger, like if you're a turtle trader, breaks out above it, they'll wait 24 hours and see if it could sustain the rally over there, or 12 hours or some arbitrary number. If it doesn't open up above there and it closes below it or opens below it, they're going to not take the signal. So that's kind of what silver did. Went bullish trend, and then since then we've had 4 straight sessions down. 200-day moving average, 24.10. We cut through that like a knife last night, and the trend reversal point's 23.68. So we're going to want to watch that, because if it breaks that, we're probably going down into the 22s. That's where we'll establish some long position, playing that longer term cycle back and forth. So outside markets, all a bit softer. They were kind of more neutral, but now you got S&P down 8.75, 45.12. Dow down 25 right now, 34,855. Dollar index, 6-month high, making a new high right now, 104.58, up 38. Crude oil down 24. We'll see how that holds up. If we get any kind of material weakness in crude, we'll look at the long side. And then Treasury yields up 0.5% right now at 422. So remember, U.S. dollar up, yields up, Chinese demand down. No bueno for the metals market. So you got any questions, give me a call, 312-858-7303. Probably look at some option trades here today. If you got any questions, again, give us a call. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.